Now, this is not a recommendation to go out there and buy puts. However, the saying goes, buy puts when you can, not when you want to. And let me explain that a little bit. People want to buy puts as the market goes down. And of course, as the market goes down, the price of the puts increase and the probability of making money via buying puts goes down. Now, as you can see here, and let's just kind of zoom in this year, we have the lows in June, and the put to call ratio was at a very, very high level. We had the lows in October, and the put to call ratio was at a very, very high level. These would be wonderful examples of buying puts when you want to. When the market's going down, when you think the market's going to go to zero, the whole world's over, the economy's done, World War III, whatever, right? That is when the crowd is buying puts, bidding up the prices, and of course, making it way more challenging to actually monetize those puts. What we're seeing right now is the put to call ratio is now at its lowest level since the highs made in April when the S&P was right around 4,600. If you take out the example in April, this is basically the lowest put to call ratio that we've seen the entire year. Now, it doesn't mean that the market has to reverse. That's not what it means. But what it does mean is two things. Number one, puts are the cheapest they've been all year right now. And this would be an example of buying when you can. At the same time, what this also shows me is the market is very underhedged. Very, very, very underhedged. So if something bad were to happen, we would likely cascade lower very quickly, like very quickly. So just keep it in mind, as a trader, you want to be able to buy puts when you can, not when you want to, at least right now. Out of those two choices, what do you have? Is this a when you want to? No. Is this when you can? Probably. And it's like I say when it comes to buying stocks. Don't buy the top, don't sell the bottom. This would be an example of that. So again, right now is a favorable time to buy puts because you can, because they are very cheap and inexpensive. And what you don't want to do is chase those puts on the way down because they get more expensive and way more difficult to be able to monetize.